Hello everyone, it is Evan from the Trade Risk Sunday, May 3rd, and I'm here with a market recap video, and we're going to look at some trade ideas for the coming week. Now, we had a very nice session on Friday, closing up over 1% in the S&P 500, but that came after a pretty tough week for the bulls in general. You can see we came in on Monday with this candle right here, and this was sort of your first little warning signal that momentum or the highs here weren't sustainable. We came in basically engulfed Friday's bar coming into the start of this week. We failed above, making new highs above 212, closed on the lows. You know, Tuesday followed up with a very tricky session where we probed lower. It's a pretty wide range tail right here. Let's zoom in so you can see this candle right here. So pretty wide ranged, but the bulls did close it pretty strong. Wednesday with a gap down and some just kind of bouncing around. That was the Fed minute day, and then Thursday was the big kind of knockout punch with the bears breaking down below this 209 and seeing some downside follow through. And then we flipped a coin again, and we basically retraced, Thursday's bearish action on Friday. So, when everything's said and done, we are closed just basically in the dead center of this mess here. And this whole month of April has been this sort of tricky back and forth, grinding higher, but we're doing it with, 2 steps forward, 2 steps back, 3 steps up. We're going back and forth here, but sort of just grinding higher, but we are yet to experience some breakaway, clean trending action environment. The market is very, segmented right now. Leadership seems to be narrowing. Some names are getting hit. Some sectors are getting hit. We're going to get into that. Let's look at the internals real quick under the hood of the market. Got the advanced decline line here, which doesn't have too much to say about it just yet. I'm going to really nitpick here to say that there could potentially be some negative divergence setting up. There isn't quite yet. You can see we came down here. The AD line came down, basically matching the levels back in April 17th on this pullback here in the S&P 500, which is sort of in line. But you can see we had a pretty nice bounce on Friday, over 1%, but the AD didn't really jump up as much as you might expect for a 1% move. And look at the McClellan oscillator down here. We are firmly below the zero line here, which is traditionally a bearish indication of outflow when we are hovering below the zero line. So, of course, there's not a whole lot to say with these just yet. They're very neutral, I would say, at this point, kind of just following price. They're not really telling us too much yet, but I think you do need to be aware of the positioning of the McClellan here, potentially some negative divergence setting up in the AD, but it's not quite there yet. It's something I'm watching, and I'm cautiously watching what the bulls do here if we do see some continuation. Let's look at some other markets now. We'll look at the small caps, and these are the guys that got hit the hardest here. For the week, they were down over 3%, which is pretty... which is a good amount of underperformance here. Broke down below this 123.50 line, which was where we stalled out in mid-February, and has played a little bit of a role for a level of significance. So, let's look at a weekly chart. I think this tells a better picture. Uptrend still intact. The big breakout from this 120 level effectively was tagged on Thursday at the lows on Thursday. So we did sort of retest this big breakout, but it's still hanging in there, but it definitely put a pause in the action. I think you need to reclaim 123.50 at a minimum to basically get some life back in this market. Friday's bounce was much weaker, up only just 0.6% for the day, and you can see we didn't come anywhere near like we did in the S&P 500, where we completely reversed Thursday's action. You can see by these two bars here, and you look at the small caps, and you can see we barely retraced just about 50% of Thursday's action. So a much more pessimistic scenario here in the IWM. Again, structurally, it definitely did do some damage here below 123.50, took out all of basically a month of trading. So we'll need to see if the bulls can quickly recover that. I think at a very minimum, though, it gives you a little bit of hesitant to kind of jump on board here and just blindly buy this dip, as maybe we are so accustomed to. If you look at the Qs, again, structurally, it didn't do a ton of damage, especially because it did break out mid-April here from this pattern of lower highs. So this little consolidation pattern, we did kind of fly up here, traded all the way above 111, and we came back down. So again, the big breakout level 105, we're still firmly above that again, but it just indicates sort of a choppy, kind of grindy, higher trending market, but it isn't an easy market, especially if you want to try and keep stops tight. It's just a lot of whipsaw back and forth, but the bulls are magically appearing at the last minute. As you can see here, like on this day here, basically on Friday's day with this gap up. So we'll have to see what happens with it. It's still, you got to give credit to where the bulls, the bulls do deserve being up here near all-time highs, or near recent highs anyway. But we'll have to see how this continues going into next week. Let's look at some other markets now. TLT had a big breakdown today. It was chopping along sideways in this range between 129 and 132. We got the breakdown, and we saw just more follow through this week. So looking at a weekly chart, you can see, was this a big failed lower high here? So in other words, we came all the way up to 138. We pulled back. We tried to head back up and retest those old highs at 138, but we only got as far as 132, and we're rolling over, which could be a pretty bearish signal that the trend is potentially just turning here. Again, looking at a weekly chart, you can see we've been in a nice uptrend since the beginning of 2014. Let's see what happens with it. But TLT right now, certainly something you have to be cautious on if you're long. Oil had a real nice day. It is a real nice week, rather. It is climbing above this $20 level. So if you look at a weekly chart here, you can see ever since this week right here, as we kind of faked out below $16, we've recovered, and the bulls are marching this higher. So oil right now looks good. It is what's helping, I think, primarily prop up the S&P, just because there are so many holdings related to oil here in the oil services names. So I think oil right now looks pretty good. I think you have some pretty good clear risk defined. So I think basically below, if you lose $20 is a super tight stop, or even below $19.50, I think you might be able to get a trade. Potentially $22 is a level I'm watching, just given this range that we put in here at the end in December. But for now, again, oil looks good short term. Long term, you got to look at what you're coming off of. So just be aware that overhead supply can kick in oil, especially if you get too much higher there. Now, natural gas had a really nice session, up 6% on Thursday, up 5% rather, and saw some continuation Friday. So let's again look at a weekly chart, because some of these names are moving enough to warrant looking at these weekly charts. And you can see, look at natural gas now putting in a nice engulfing bar. This has just engulfed 3 weeks worth of action here. So the past everything in April essentially was just recovered, engulfed, and it looks like we want to head higher here. So potentially a short-term bottom, maybe intermediate-term bottom is in natural gas. We want to see weekly follow-through. Again, the fast-moving averages are still heading down. It's a damaged chart, but it's a chart that could bounce and could see some further prices, could see further higher prices. So 1510, 1450, these are upside levels to have on watch. So be aware of those next week. Gold, I don't have too much to say about it. It's still pretty messy down here. Hasn't done anything too significant, so gold is just not that interesting to me. And silver, not that interesting to me as well. 1485, some pretty cleared support defined, and you don't want to see that tested again if you're a silver bull. So we'll have to see what happens with those charts moving forward. The dollar, had come off this week as well. You can see after its epic run that it's had back to a weekly chart all the way from July of 2014. It's finally putting in a little bit of a corrective action here, but it's been in such a strong uptrend that you are going to have those dip buyers. It is at an interesting level here. Basically, this base out that we found out that we were in the beginning of 2015 is where it's trying to find support now, right around 24.85, just below that $25 level. So let's see if the US dollar can stabilize a bit here before potentially retracing and heading back to retest those previous highs. Now, this week, we had a pretty split market. We had the IBB, which had a really nice day, up 3% on Friday, even though still down 5.5% on the week. So this is the weekly chart of the IBB. You can see the really large range here. Now let's go back to a daily chart. You basically, so you're getting the early stages of this range potentially that's getting carved out, 335 to 368 on the upside. Basically a double top here, slightly lower high depending on how you want to look at it, but ultimately you do have a pretty clear defined range here. So this is something that could start to develop over the next couple of days, weeks, months even, or it could be something that could lead to some continuation pattern to the upside. It could turn into a reversal pattern. Who knows? But for now, a very fast-moving market, so you need to be careful here. But for now, you have a pretty good line in the sand on the downside, 335. And then again, if you just want to wait for that breakout, eventually above 368, you almost don't have to be involved in this market until it can get back above that. So depending on your style, that's the way I'd look at it, but definitely a damaged sector this week. XLV, the healthcare sector, had a nice session on Friday, but again down 2.3% on the week, so this was another laggard. And the utilities were down 1.5% on the week, which were the laggards. And when you take the complete other side of things, you had sectors like energy up over 1% on the week, and that's mostly thanks to crude oil. So they were up over 1%. You had the home builders, which were up almost 2% on the week. So we're moving by these quick, but I just want to show kind of the split market here. And even the financials were positive this week, despite these indices putting in some interesting kind of volatile moves. So that's where we are. You got some sectors that are just moving up strongly, holding us up, and you get some that are just getting hit, like the biotechs, the small caps, so on and so forth. So let's get into some individual names here. Apple had earnings. Earnings seemed pretty good. I didn't read too much into the report, but we got a little bit of a sell-off off of it. Nothing too major. Weekly chart, everything's still pretty much intact. It's down 1% on the week. It's still holding this little rising trend line. Almost thought we were going to lose it and break down if we got the follow through to the downside on Thursday. We didn't get that, so the bulls stepped in. Could be interesting again above 130. I think again 132. Of course, these highs here going into earnings around 133 are going to be an important level to break above. But for now, Apple stabilizing, trends intact. Let's see what we get out of it. Google, not too much to say about it, had earnings. Initial reaction was good. It already faded all of that earnings move. It's back in the middle of this choppy range here on a weekly chart. Not too interesting to me, so we're going to move by it. Netflix had a really nice session on earnings, of course. It's now digested for almost 2 weeks, going sideways, still holding pretty pent up here with another big, large gap here, basically following up last earnings. So we'll have to see 570, 350. That's a breakout momentum level. Those are the highs essentially that we got to following up earnings. Tested it briefly on Monday, I believe this was. So 573.50, that would be some type of momentum breakout level in Netflix. Otherwise, I think you just need a little more time for that, for the moving averages to catch up, and just for that price action to heal up a little bit. Now, Amazon, similar camp as Netflix, right, had a nice gap up off earnings, put in a nice healthy consolidation for basically the entire quarter, but it is pulling back now, and I think we just need to see how, wait for it to stabilize a bit. It's not too actionable for me here. Again, you can see the nice tail on Friday's session. We ended up closing green after trying to make new lows and continue to fill this gap. So let's see Amazon, see if it can stabilize a bit more, but it could be an interesting play back to the long side if it does break out of this retracement that it's in right now. Facebook, breaking down through some $80, $81 support. Let's look at a weekly chart. You can see not a whole lot of damage on a weekly chart just yet, but it is breaking back below this breakout level, this $81 breakout level. So, if you're a bull, you really want to see these lows hold. You don't want to see it go much lower than 78, because I think at 78, you risk a potential, a breakdown of more significance. You risk running all the way down to 73, 75. So I think if you're a bull here, you really need to see this step up. Basically now Facebook's almost getting trapped back in this prior range, so you want to see 81 recovered. Otherwise, could just be some dead money in here for a while. Think of something like Google, or something that's just range bound in a larger term holding pattern. Now Twitter got annihilated off their earnings. Basically gave back exactly what the bulls made last February. Methodically had been running up ever since this gap up here off earnings. It's been trying to grind higher, and now we're just back to the range, the bottom end of this range. Look at a weekly chart. You can see you got some significant resistance now at $52. This is where now Twitter has failed twice. Wouldn't be surprised to see lows down here at 35, 36 tested over the next coming week. Perhaps oversold in the near term, but coming off of earnings like this, you just got to be careful jumping in too soon. So it could be worth a bounce. It could be worth more follow through to the downside. It just needs more time right now. So Twitter 52 to 36, that's your long intermediate or long-term range really in Twitter. So let's see what happens there. Now Tesla had a nice week, 188 to 220. That's the range I've been watching for quite a while. Look at a weekly chart here. You can see we broke this downtrend that we've been in ever since the all-time highs in September. So we've been just trading lower, basically flagging lower. You could look at it like that. And then you finally got that break above it these past couple of weeks, and we are now definitively above this 220. So certainly still not the cleanest chart there is, because these bars, we had a pretty quick move here off of this, essentially this false breakdown below 188. But it's still, had a nice push higher, flagged a little bit, had a nice push higher. It's now flagging again. So, really you need Tesla back above 230 for some momentum, breakout, fresh highs here. Otherwise, let's see how it handles this retest of 220. We already got that briefly on Friday, closed flat on the day. So Tesla is shaping up here. Looks like it's going to be a long candidate. Something in play on the long side in the next coming weeks, as long as it can still stay above this 220 level. So I am watching that right now. Now Alibaba, this one is struggling a bit here. It's on the lows. This nice range that it's been put in here between $81 and $87 is still intact. Look how closely overlapping all of these weekly bars are, and I think a close up below $81 is a great looking short setup for this name. Now I don't know when earnings are. I don't think they've reported yet, so I think they're coming soon, so that definitely can be moving the technical landscape here, but still staying pretty weak. We'll have to see what we get. Bulls stepped in on Friday and saved it, closed us above $81, but again, let's keep our eyes out for earnings time, and that's a tough pattern right now. Finally, the last name we're going to go through, GoPro, had a nice earnings session. It's pulling back just a little bit, but it made its way all the way up to almost tag these previous levels of supply here back in February of this year, 54.50. We can see, the post-earnings release, we tested right up into there. We're fading a little bit. We might need to close this gap down here right around $47, but GoPro, let's look at a weekly chart. You can see looks like these lows at 37.50 are trying to hold. So let's see if they can continue to hold up constructively in the next coming week or so, fill this gap and see what happens. GoPro, though, again, similar to Tesla, could start to get more interesting on the long side if we are now done with this flag, or with this previous basing pattern. And now let's look at a couple of setups here on the long side. First is TRMB. had a really nice engulfing bar. This was off of earnings on Friday. You can see it came all the way down, engulfed a few weeks, almost an entire month's worth of action. And this one looks pretty good here. We need to see some continuation. It's been in a downtrend now for almost a year. So actually longer than a year, pretty much since last April. So yeah, this one could look good. Look for some follow through into next week. TRMB, I think another hurdle that it needs to get over is basically right in front of it now, 2660. Clear out all of this recent highs in here. That one will be an interesting one. Next is AON. This one basing out pretty nicely here. You can see it tried to make a move up, tried to really get going on Friday, up almost 2.5%. Got faded a little bit, but basically you want to see it basically take out Friday's highs. If it can get continuation above there, it looks like this this recent range here could be resolving to the upside. That's a nice looking setup I like heading into next week. Price line's another one, 1260 level. You can see almost a little cup, nice rounded bottom here that it put in basically to fill this gap here, and it's back there. Like, take a look at a weekly chart. You can see pretty interesting level that it's at, 1260. Perhaps it wants to come back here, retest these highs up around 1370. So price line looks pretty good here as well. BRKB is Berkshire Hathaway. Take a look at a weekly chart. I think this shows the picture here. Nice falling wedge. You can see it's been basically consolidating pretty nicely in a downtrend, but a tight downtrend, an orderly downtrend. Probably something that if you're bullish, you want to see. You basically want to see this breakout reversal above it, snapping this downtrend line above 145. Something there, something thereabouts to give you some reassurance that this uptrend might be resuming. So BRKB, this is one, or if you want to look at the A shares at a cool $215,000, you can take a look at that one as well, but that's an interesting setup. Next is Monster. Monster's playing a lot of games up here, but it is still hanging high and tight, holding this earnings gap. We had a nice run up here into the end of last week, but it faded it for most of this week, essentially all Monday through Thursday, but then we had a nice powerful bar up 3% on Friday. So let's see if it can get above 142 again. Looks pretty good here, and very similar, and last but not least is Nike. Sort of reminds me of Monster here, just playing around in this tight range up here, just bobbing around. So keep an eye on this one above 102 or so. I think that one could get going as well. So I hope that helped. It's a tricky market for sure. We're in a new month. We're in May, the old sell in May adage. We'll have to see if that comes to fruition. But for now, let's see how how we navigate these markets going forward. I think you got some split. You got the leadership that's kind of dwindling a little bit, and you just got some split sectors in here giving us some mixed signals. So I hope that helps. Thanks for watching as always, and I will catch you next time.